Hello guys, welcome back to my channel. We are back with another video. Today we will have a detailed look about the 5 best companies in the large cap sector which are actually trading its all-time low, or you can say which is trading around 52 weeks low, which are actually in the big large cap industry. So let's start the video. But before we start, if you are new to my channel, don't forget to like and subscribe the channel and share with your friends and family. So the first company in our list is LIC Limited. So the current price of the company is around 550 rupees. The Life Insurance Corporation of India is actually the full form of LIC Limited, and in the last 1 year the company has given almost negative 37% returns to its shareholders, whereas the all-time high was around 918 rupees and the low was 530 rupees. So the company is actually engaged in various life insurance companies headquarter. So the company is actually engaged in the insurance sector, and it is one of the India's largest insurance company as well as the largest institutional investors of total asset under management of around 41 trillion rupees, or in US dollar we can convert it's around 510 billion dollars. So we will not go deep about this company. So let's see the fundamental key highlights of this company. So we will have a quick snap. Like the market cap is around 3,50,000 crores. The P is around 13.8. The ROC, which is return on capital employed, is 142%. The EPS, which is earning per share, is 40 rupees. The book value is 10 rupees, whereas the ROE, which is return on equity, is 48.2%. So this is the quick fundamental key highlights of the first company. So now let's have a look on the competitors in the current market. So the company is in the leading position, followed by HDFC Life Insurance and followed by SBI Life Insurance. You can just pause the video and compare the company with its competitors in various fundamental key highlights like PB ratio, PE, like EPS and ROE and many more. So now let's have a look on the pros and cons account of the company. So in pros, the company is expected to have a good quarterly results, and the company has a good return on equity of 3 years, which was around 76.4%. Whereas in cons, the stock is almost trading 55 times its book value. The company also has delivered a poor sales growth of almost 8% in the last 5 years, and the earning includes an other income of 1,61,000 crores, which has not been mentioned by the company. So these are the pros and cons of the first company in our list. So the second company in our list is Marico Ltd. So the current price of the company is around 476 rupees, whereas all-time high was on 554 rupees and the low was 470 rupees. In the last 1 year, the company has given almost negative 8% negative returns to its shareholders in the last 1 year. So the Marico Limited is actually engaged in the FMCG sector. So it is one of the Indian multinational consumer good companies providing consumer product and services in the area related to health, beauty and wellness. So the company's headquarters is in Mumbai, and in present the Marico is over 25 countries across Asia and Africa. Some of the famous brand of these companies are categorized in like hair care, skin care, edible oils, healthy foods and male grooming and fabric cares. So now let's have a look on the fundamental key highlights of this company. So the market cap is around 61,000 crores. The P is around 50. The ROC, which is return on capital employed, is 43%. The EPS, which is earning per share, is 10 rupees. The book value is 30 rupees and the ROE, which is return on equity, is 37.2%. So now let's have a look on the competitors in the current market. So this company is in the 4th position. The first one is taken by the Nestle, the second one is Britannia Industry, and the third one is Varun Beverages. So you can just pause the video and compare the company with its competitors. So now let's have a look on the pros and cons account of the company. So in pros, the company has a good ROE, which is return on equity of 3 years, which was around 36.4%. The company has also maintained a healthy dividend payout of 88%. So whereas in cons, the stock is almost trading 16 times its book value, and the company has delivered a poor sales growth of almost 10% in the last 5 years. So this was the second company in our list. So the third company is Wipro Ltd. The current price of the company is 368 rupees, whereas all-time high was around 550 rupees and the low was 355 rupees. In the last 1 year, the company has delivered almost negative 32% returns to its shareholders. So the company is actually an Indian multinational company which provide information technology consulting and business process services. The company is also involved in the cloud computing, cyber security, digital transformations, artificial intelligence, robotics, data analyst and many other technology consulting services to the customers in 167 countries. So now let's have a look on the fundamental key highlights of the company. So the market cap is around 2 lakh crores. The stock P is around 17.8. The ROC, which is return on capital employed, is 21%. The EPS, which is earning per share, is 20 rupees. The book value is 130 rupees and the ROE, which is return on equity, is around 20%. So this is the fundamental key highlights of the company. So now let's have a look on the competitors in the current market. So the company ranked 4th in the position. The first one is TCS, which is Tata Consultancy Services, followed by Infosys, then HCL Tech, then it's captured by Wipro. So you can just pause the video and compare with its competitor in the current market. So now let's have a look on the pros and cons account of the company. So in pros, we haven't got any data related to the pros of this company, but whereas in cons, the company has delivered a poor sales growth of almost 7.5% over the last 5 years. So this was the third company in our list. So the fourth company is Tata Consumer Product Limited. So the current price of the company is around 720 rupees, whereas all time high was around 860 rupees and the low was 686 rupees. In the last 1 year, the company has delivered almost negative 12.5% returns to its shareholders. So the company is the Indian fast moving consumer good company and a part of a Tata group. The registered office is located in Kolkata, while its corporate headquarters is in Mumbai. It is the world's second largest manufacturer and distributor of tea and a major producer of coffee. The company also involves many other different products list, which includes water and many more. We will discuss this later on this video. So now let's have a look on the fundamental key highlights of this company. So the market cap is around 66,000 crores, the P is around 63, the ROC is around almost 10%, the EPS is around 12.5 rupees, the book value is 160 rupees, and the ROE, which is return on equity, is around 6.5%. So now let's have a look on the competitors in the current market. So the company is in the leading position, followed by CCL Products, followed by Tata Coffee. And you can just pause the video and have a look on the different competitors in the current market, and you can just compare with the different fundamental key highlights. So now let's have a look on the pros and cons account of the company. So in pros, the company is actually reduced debt, the company is almost debt free, and the company has delivered almost good profit growth of almost around 20% in the last 5 years. The company has also been a healthy dividend payout of 52.4%. Whereas in cons, the company is trading almost 5 times its book value, and the company has a low ROE, which is return on equity, of around 6.2% over the last 3 years. So this is the fourth company in our list. So the last company in our list is IRCTC Ltd. So I have made a separate video on IRCTC Ltd on fundamental analysis. So you can just pause the video and you can just go over there and see that if you want to, or you can just check it out later. So the current price of this company is around 600 rupees, whereas all time high was around 778 rupees and the low was 550 rupees approximately. In the last 1 year, the company has delivered almost negative 22% returns to its shareholders. So the company is actually, the full form is Indian Railway Catering and Tourism Corporation Limited. This is one of the most important company in the railway sector. So the company is actually incorporated in 1999, and it is basically an arm for the Indian Railway to upgrade its and manage the catering and hospitality services at the stations, on trains and other locations, as to promote domestic and international tourism through development of different things like hospital, tourism, tour package and many more. You can just pause the video and have a look on entire detail about this company. So now let's have a look on the fundamental key highlights of the company. So the market cap is around 47,000 crore, the P is around 50, the ROC, which is return on capital employed, is 51%, the EPS, which is earning per share, is 12 rupees, the book value is 28 rupees, and the ROE, which is return on equity, is 40%. So now let's have a look on the competitors in the current market. So the company is in the leading position, followed by Easy Tip Planner, and you can just pause the video and have a look on the different competitors in the current market, and you can also compare with different fundamental key highlights. So now let's have a look on the pros and cons account of this company. So in pros, the company is almost debt free, the company has expected to give a good quarterly results, and the company has a good profit growth of 23.8% CAGR in the last 5 years. The company also has a good ROE, which is return on equity, of 3 years, which was around 32%, and the company has also maintained a healthy dividend payout of 41%, and the debtors day has also improved from 161 days to 111 days. Whereas in cons, the stock is almost trading 21 times its book value. The promoters holding has decreases over the last quarter, which was around negative 5%, and the company has delivered a poor sales growth of almost around 4.34% over the last 5 years. So this was the last company in our list. So now these are all the important large cap stocks which are trading almost 52 weeks low. You can just pause the video and have a look on different companies too. Just like I have not mentioned Wipro, ICICI and Cipla, you can just go and check out different companies over there too. So at last, I just want to tell you that this is not a bias or recommendation video. This is just for a general purpose and education purpose. You can just have a quick view about it. So do your own investment at your own risk. So thank you so much for spending some time with us. We will back with another topic. Till then, bye and have a nice day. Bye bye.